Okay. Good morning, everyone. Good morning. Good morning. We are live. Let me see if I can copy. Good morning, everyone. This morning, we want to have another beautiful session together. By the grace of God, we are going to be looking at the forex market together, and we are going to be rubbing minds, looking at what is possible, what is happening in the forex market, especially from the global macro perspective. What is happening? Where can we position for trade opportunity for the week? Uh, I want to believe that an average trader is interested in knowing or having an overview of the larger picture of the happenings in the forex market, and that's how you can really uh, position yourself and make it big in the market. And that is what we are going to be doing on this live chat. Let's see how we can quickly post the link so that people can join. We are hoping that we will have quite a number of persons online today. So let me see. Oh, let's generate a link. Please, if you're on the call with me and you can hear me, please just type one in the chat box, so that at least we can connect. All right. If you can hear me and you are on the call, please type one in the chat box. The live is starting immediately, and we are going to be looking at the fundamental storyline of the forex market on a global scale. We are going to be looking at the sentiment storyline, and of course, we'll be looking at the technical storyline of some selected currency pair and assets, such that you can position yourself for the week and see how you can maximize opportunity as they present themselves in the course of the week. Good morning once again, everyone. Good afternoon, good evening, depending on where and when you'll be seeing this video. I remain Mr. Kimbode Damilola, the lead analyst at Potential Miners International. This is a research platform that is committed to conducting quality researches that can harness opportunity and potentials at individual, at corporate, and at government levels. And one of the things that we have done over the years is to research into the market of forex market, and we have been able to come up with a very holistic approach to seeing or analyzing the market, and we now leverage on that to position ourselves to make consistent profit in the market. I want to welcome you to this live chat, and I want to dive straight into what we have today. We are going to be looking at some few things together, and it's important that we have idea of the way we approach our own analysis. At Potential Miners International, our approach to the market is a three-phase approach where we do the fundamental analysis. That is what we call the identification protocol. We identify few assets that we might need to position for, depending or based on the fundamental indicators. And of course, we now move our analysis further to see into the sentiment of the market. We look at the risk sentiment of the market. And of course, we also take our time to look at the position sentiment through the commitment of trader report, COT report. And all of this is to help us to be able to choose that particular asset that will now go ahead into the technical to begin to analyze. It's very important, and an average trader should take his or her time to first analyze the market to be able to identify and optimize what to trade. Is on the strength of what you have been able to analyze and pick the asset that you are to trade that you are likely going to be able to make consistent profit in the market. And this is very important. Let me see. Okay, I think I've let me just post the link to our WhatsApp group so that people can join, and so that we can have a nice time. All right. Akaba. Okay. All right. This is the link. I want to believe that people will now begin to join now, so that we can really relate. All right. So without further ado, let me just go straight into the fundamental analysis. Please, if you have access to the link, you might need to just repost it on your social media handle so that you can help uh, at least one or two average trader. Good morning, Mr. Abdurrahman. Good morning, good afternoon, depending on where you are joining me from. Good morning. Morning, sir. So let's just go straight. Today, I would like us to have the session to be as brief as possible. If possible, within 30 minutes, we are done so that we can just head on and do our thing for the day. So, as I was saying, we start our analysis with the identification protocol, and that is fundamental analysis. And I said it last week that the bulk of analysis that you have to do under fundamental will still narrow down to what the interest rate decision is, or interest rate position is for that particular currency. For instance, if you pick United States dollars now, whatever indicator you want to analyze at the economic level, the fundamental indicators, be it the unemployment rate or the employment rate or the gross domestic product or the inflation rate, everything you want to analyze, whether the sentiment of the market at any point in time, the retail sales, depending on what indicator caught your interest, whatever you want to analyze, every indicator at the end of the day is going to be pointing to the position of the interest rate or the decision of the monetary policy authority as to, okay, from India, you're welcome, sir, as to what the interest rate is going to be, and whether looking forward they are going to be hiking interest rate, or they are going to be cutting interest rate, or whether they will be holding interest rate. So we want to quickly look at what we have when it comes to interest rate. Then we'll probably take our time to overview the expectation of maybe events for the week, as to whether we are expecting any event relating to interest rate in the course of the week, or any event relating to maybe inflation rate or the gross domestic product outlook. So we want to look at the interest rate, and just like we have last week, I said it that this interest rate, the stance of the interest rate does not change all the time. In fact, sometimes you might have 3 weeks of a constant interest rate. Sometimes you have 3 months of constant interest rate. Sometimes you have up to 4 months, depending on the reality of the economy of that particular currency. So, but what is important for us at Potential Miners International is to overview the interest rate as to what is the likely divergence, or what is the measure of divergence between interest rate of currency pairs. And we said that our focus is usually on the 8 majors. the 8 majors, and we have the interest rate here on the forexfactory.com. So just overview it. That's all you want to do. For GBP, the interest rate is still 3.75. And of course, when we move to US dollars, the interest rate is still 3.75. GBP 3.75%, US dollar 3.75%, Australian dollar 3.60%, Canadian dollar 2.25, New Zealand dollar 2.25, and euro is 2.15, while Japanese yen still remain at 0.75. And of course, the safest safe haven currency for now, which is the Swiss franc, still maintain interest rate of 0.0%. What that means is that the focus of our identification will be to look at the currencies, maybe the 3 currencies with the highest interest rate, which of course will include the GBP, the United States dollars, and the Australian dollar. These are the currencies with the highest interest rate. You want to take note of that. Then you will not also take note of the currencies with the lowest interest rate. There's a way you begin to harness all of these things so that you are not going to keep shooting yourself in the leg. And of course, the first phase is this identification process, which we have now been able to identify that euro has 2.15% interest rate, follow on the lowest CADA, followed by the 0.75 for the Japanese yen and 0.00 for the Swiss franc. So having said all of that, we want to now dive into what are we expecting for the week in terms of news events, in terms of maybe data release from central banks, from different research institutes. So today is Tuesday, 20th of January 2026, and of course we are expecting the news that we are expecting now. Let me just reload this so that okay, for today we are not expecting any news that is of importance to our decision in trading. So but tomorrow we are expecting inflation related news, the CPI year on year for Great British Pound. So it means tomorrow data release for CPI year on year has tendency to shift things in the market, especially as touching the GBPPS. So then after that, we are still expecting Donald Trump will speak tomorrow by 2:30. Of course, that's a soft data, and it might not really amount to anything for us when it comes to this decision of the interest rate. So we are looking out for AUD, the unemployment rate, and the employment change. That will be 1:30 a.m. on Thursday. Then United States dollar, we are expecting final GDP quarter on quarter. So all these data said they are very important, and they have the likelihood to shift the narrative of the trend of each of the currencies concerned. Is that okay now? So but then you are not to really worry yourself about what event is coming, what news is coming. What is important is to check the interest rate, then you overview what and what data release can affect the interest rate decision for a particular pair. In fact, for this week, we have the Bank of Japan policy rate. This is interest rate decision for Japanese yen. And from what we have, the previous is 0.75. Of what we have now is 0.75. And forecast is saying that they are still going to hold rate. Then every data set is pointing to the fact that Japanese yen is still going to be holding the interest rate at 0.75%, which means 75 basis points. So then, and that's Friday. What other news do we have? I believe any other news is not as important to our trading as that of the policy rate for the Bank of Japan. So it now means that when we are to pair currencies, we can now focus on pairing currency with high interest rates such as the GBP, the US dollars, the Australian dollar, with currency with very low interest rates. This is the identification protocol, and we have been able to sort that out. The next thing we are to do is to go straight into the optimization protocol. And that is where we begin to overview the sentiment of the market as of this morning, 20th of January 2026. And it's very important for us to go through all our indices that we use for measuring the level of sentiment. It's very important for you to know that whatever you have identified in the first phase of the analysis, you still need to optimize it when you get to the sentiment phase of the analysis before you now go to the technical phase of the analysis. So to overview the sentiment, what we are saying is, what is the risk overview on a global level as of today, 20th of January 2026, because the risk tone of the market is going to really determine where capital is flowing into and where capital will be flowing out of. Is very important. So we start with the S&P 500 index. That is very important for our analysis, and we just overview the structure of S&P 500. Once we have a predominantly bullish structure, especially when the price is above the cloud that we use, this is what we use as our gauge for the tide. Are you getting it now? Gauge for the tide, and of course we have a metric that shows the structure as well. So once you have the S&P 500, when you have to get to your daily chart. It's very important. You have to set it and get to your daily chart. Once you have the this particular tool, once you have it on daily and you have your tool plugged in and the price is above the cloud, it's obvious that predominantly, you can even see it, you can see that predominantly S&P 500 is on a bullish market structure. So the next thing you do is to check the Nasdaq Composite Index. That too is showing us that we have a predominantly bullish structure and tide. The next thing is to check the Dow Jones. These are the three indices you want to check that overview the perspective of investors in the stock market. And these are indices that really shows on the overall what is the tone of risk in the mind of an average investor. Where are they putting their money? Are they ready to continue to put their money on the line to make more money? So these indices are showing us that we still have a tone of risk on in the market from the stock market point of view. Now let's now quickly look at the fixed the volatility index of S&P 500. We expect that this index should be below 20 when there is a perfect stability in the market, which means when there is no panic in the market, the S&P 500 volatility index will be below 20. You will notice that currently we have this volatility index jumped from around 15.93 to 20.83, and this is because currently, in fact, as at very early this morning, from yesterday, day before yesterday, Donald Trump has been posting a threat of tariff increase on the Eurozone, and of course that is connected to the Greenland issue. Is trying to take hold of Greenland, as a particular location, and the Eurozone. Of course, this Greenland belongs to Denmark as a kingdom of the kingdom of Denmark. But Donald Trump is interested in Greenland. He wants to take hold of, he's saying that this should belong to the United States. And of course, anybody that will stand on his way is now posing threat that is going to increase the tariff on whatever export that they are enjoying from United States. And of course, because of that particular tariff threat, the risk sentiment of the market is a little bit shaky, and that is why you have the fix jumping from 15.93 to around 20.2. But what is important is we want to observe, go back again to see how is the S&P 500 responding to it. If S&P 500 is still stable, this VIX might not really mean that there is a level of panic in the market. And of course, the risk is just moving from 15.93 to 20. Immediately the VIX index goes above 20, then that is when you have issues with the level of risk in the market. So as of now, we have the S&P 500, the composite, the Nasdaq Composite Index, and the Dow Jones Industrial Index, alongside the VIX, telling us that there is still a level of risk-on sentiment in the market. And this is very important. As much as this particular tariff threat from Donald Trump has the likelihood to shift the risk tone or direction of the market, for now, today, 20th of January 2026, we still want to maintain that we have the risk tone of the market is more to the risk on than the risk off. Are you getting it now? But when you observe, you might need to pay close attention to this VIX. When you observe that this VIX or volatility index of S&P 500 jump, and it jumps above 20, and it jumps, and the value continue to increase, then you can be rest assured that there's a level of panic in the market. And that is when you want to change your perspective of the risk sentiment. When it's above 20, it means there is fear in the market. Investors will be pulling their money massively from high yield currency into safe haven. Are you getting it now? From high yield currency into safe haven. So at the moment, we are in a transition period where the risk sentiment, as measured by volatility index, is around 20. But immediately it gets above 20 and it becomes maybe 21, 22, 25. That is when you really need to really be concerned. Are you getting it now? So, but for now, we have risk on tone. But then let's now check what is the tone of the dollar index, because this is very important. What is happening to the dollar index? You see this now. As of this morning, 20th of January 2026, there is a tone of dollar dumping. In fact, we entered a trade on gold yesterday and at the platform, and by this morning, the trade already cash out at ratio 1 to 4. I will still show you the trade we entered. Apologies to those on the Telegram chat channel. We deem it fit to post signal, at least one signal per week, so that you can just enjoy what we enjoy. And we are still hoping that this week we are still going to post the signal for the week. But however, yesterday we picked a trade at the platform on gold, and it had already delivered on our account. I will show you when we get to the chart. So, but what we are saying is, for dollar aversion, for dollar, investors are already dumping dollar as of today. So it means that the summary of our risk sentiment or sentiment analysis is that we have risk on dollar aversion. Don't forget that the volatility index has just jumped from 15 to 20. So if you follow the volatility index and you notice that it's moving above 20, that is showing you that the risk on is now shifting into risk off. Are you getting it now? But we are still in a transition period now. So our summary for today, which is important for whatever we are going to be analyzing in the market, the summary of our analysis from today, as at this morning, is that the market is in a risk on dollar aversion sentiment overview. Then let's now go straight into the chart. Let's pick one or two pairs or currencies or assets then we'll now analyze. I want to believe that this is where you now begin to connect the dots so that you can position for trade. So at Potential Miners International, what we usually do is that we overview the 7 major currency pair. We have 7 major and we have 5 minors. 7 majors and 5 minors, and like I did last week, I'm going to run you through the majors and the minor. At Potential Miners International, our major, the PMI major, include the gold, XAU USD, BTC, Euro USD, CHF JPY, GBP JPY, USD JPY, and GBP USD. These are the major. Then, of course, the minors include AUD JPY, Euro JPY, and GBP NZD, GBP AUD, GBP CAD. So what we are going to do now is I'm going to pick 1 or 2, or let's say 2 from the major, then I will probably pick 1 from the minor, so that we'll just use that as an example. So when we pick the currency pair or the asset, we are going to analyze the capital flow narrative of that particular asset. Then we'll now look at what is the directional bias and what is the structure and tide of this particular asset. If we are chance to see a trade signal, now we are going to position for it. However, we have advised that everyone should be a part of the Telegram challenge, so that whenever our trade signal matures, we can just post the trade on the Telegram channel, so that we will not be forced to take trades that are not yet matured, on the live session. So let's pick gold. Let me quickly show you the trade we picked yesterday, so that you can understand where we are coming from. So yesterday, the narrative for yesterday, we already saw the sentiment tilting in favor of risk on dollar aversion from yesterday. And of course, we overviewed the position sentiment of the big players, the COT report yesterday. We saw that on the net, gold, the big players, the big banks, and the hedge funds, they are positioning on the average for a net buy. You see, this is the net change. You see gold. This is COT report. This is where we observe the COT report. Then we saw that on the average, the big banks, the hedge fund, you see, large speculators. You see these large speculators, they are the big banks, the hedge funds. What is the position they are looking out for when it comes to future trading? So we observe that gold, they are positioning on the net for a buy. So coupled with the risk sentiment that we have overviewed in our risk analysis, we now position for a buy on gold. So how did we take the trade? Remember that what we do at Potential Miners International is that we have some set of rules that we follow dogmatically anytime we want to take trade, and we are now coming to the technical storyline. So let me just walk you through how we picked the trade yesterday, so that of course when we now check other assets, if we can see a trade signal on that asset, we pick it immediately. However, if it's not mature yet, we are going to wait. Then we'll post the signal on the Telegram channel. I want to encourage you, if you are seeing this video anytime, you might need to be a part of the community that we are building. We call ourselves the King of Waves Conclave, and this is a community of people that are ready to trade the forex market from a professional standpoint. You don't want to gamble your money. Believe me, if you come on board as part of the conclave, you will never lose money in the market on the long run, because we trade in clusters. So we encourage that if you want to overly risk your capital, the maximum you can risk is 5%, which means you must be able to enter trade with your capital. 20 trade, I mean to say, you must be able to enter 20 trades with your capital. Suppose you want to risk your money, you must be able to enter 20 trade with whatever capital you have, which means you are to trade only 5%. So let's take for instance, you have $100 in your account. 5% of $100 will be $5. It means before you can blow your money, you must have entered 20 trade, and all the 20 trade will be a loss, and which is practically not possible. So that is why we know and we are certain that at Potential Miners International, you cannot lose money eventually. Yesterday we enter a trade on gold and a deliver ratio 1 to 4, which means if you have entered that trade with us and you risk 5%, on your account as at this morning you have made 20% of your account, because you are expected to risk. Let's say you are risking, you have $1,000 now. 25% of $1,000 is $50. If you have risked 5% of $1,000, and that's the highest percentage you can risk. If you know you are risk averse, you might risk 2% or 1%. But we recommend that suppose you want to overly risk your money, you must not go beyond 5%. What that means is that you will enter 20 trade, you will be able to enter 20 trade with your entire capital. So before you can blow your money, you must have lost 20 trade consecutively, which is not possible. So if you have entered the trade yesterday with 5% and you take ratio 1 to 4, you would have made 20% of your account as at this morning. Even if that is the only trade you enter for the week, you have done 20%. Last week we posted a trade on the Conclave Telegram channel, and the trade was a loss, which means if you enter the trade with 5%, you have only lost 5% for last week. And this week you have entered another one, which you are expected to have made 20%. So at the end of the day, there is no how you can lose money with Potential Miners International approach to trading. So this week we are hoping that we'll post at least one trade signal depending on what the market gives us, so that if you lost you lost money last week, you will make your money back, expectedly, by the grace of God. So let me just quickly just show you what we did yesterday before we now pick other trade. I want to believe that we are still within our time. So this is 32 minutes. We'll make it 40 minutes in all before we call it a day. So let's just go straight into what we have. Please, if you have any question in the comment, you might need to drop it in the comment box so that we respond to it live as we are live now. I'm going to respond to you. So what we did on gold yesterday, we start our technical analysis with the directional bias. So we overview that we are on a bi-directional bias. Then we check our orientation of the market is a markup. Markup means uptrend, and we used to do that on the monthly. So we go to the daily. On the daily, we have the tide and the structure. You will notice that on the daily, this was yesterday. On the daily, we still have a buy market structure. Can you see this? All of this structure, you are to plug in the particular tool that will draw it for you automatically. So you are not the one drawing the market structure, the break of structure, change of character. You are not to worry yourself with that. So it's the tool that will draw it. So you are not doing anything. You are just looking at it. So we observe that on the daily, the market is on a buy market structure, and the tide is a buy tide. Why? Because the price is above the cloud. So we now move to the 4 hours chart. On the 4 hours chart, of course, this was where we positioned for the trade. We waited for a full 4 hours correction. Then after the correction, we waited for the market to come a bit down and sweep a level of liquidity at this level. So we now go to the 1 hour chart. This was where, let me just hide this so that let me just hide this so that you can see that was the trade. But let me just pick it again here. So this trade, it was around this place. We saw an engulfing. After this engulfing, this was where we positioned the trade yesterday. The reason why I didn't post it was because I believe that we are going to have a signal for between today and tomorrow, maybe on AUD-JPY or GBP-JPY, as the case may be, and I want to ensure that at least we post one trade per week. So I don't want to disturb, traders with a lot of trade signals on the group. You don't worry, you will eventually make your money. If you are trading with us at Potential Miners International, you can be rest assured that you will eventually make money in the market. You will eventually make money in the market, guaranteed. So we position for the trade, and this was how we picked the trade. We did ratio 1:4. The trade delivered. In fact, I woke up this morning, I saw the trade already delivered. It was just awesome. So, and just imagine you have a profit that you have just made ratio 1:4. You have made 4% of your account on your profit. That's how we roll at Potential Miners International. It is as simple as that. It does not have to be complicated. Trading does not have to be complicated. So let's leave gold. Let's go to another currency or asset. Let's say, of course, last week we mentioned that BTC should we are expecting a buy, and this buy delivered, but our condition is not met yet. Before we can begin to buy BTC must close above the cloud. That's the condition. Because although the structure is a buy now, turning to sell now, but the tide is still not a buy yet. The tide means that the price must be above the cloud. So, and until BTC comes above this cloud, we are not going to buy. Of course, we believe that BTC should buy big time, but if BTC could not close above this cloud, we will not enter any position for buy. You get it now. So let's move. Let's see Euro USD, then I will probably see CHF-JPY before we move. Now, fine. Let's now analyze the narrative of this market. This is Euro USD. You will remember that I said that after you have identified the currencies based on their interest rates, you are expected to optimize the choice of currency that you have identified based on the risk sentiment overview. Now, the risk sentiment overview says that we are in a risk on dollar aversion, which means that investors, they are losing confidence in dollar and they are dumping dollar. Now, that is closely related to the issue between Donald Trump, United States, and Denmark. I mean, the Greenland issue and the tariff threat that Donald Trump is posing to the Eurozone. And of course, if investors keep to dump dollar, the confidence will be shifted into euro, into GBP in most cases. Are you getting it now? So if this sentiment overview continues, we are expecting that we are going to have a buy movement on Euro USD. All other things held constant. Now, if you overview the technical, you can see that the directional bias is still a buy. If you overview the monthly orientation, you will notice that we are expecting that Euro USD is going to still push up. We are expecting a push up, maybe to somewhere around here. So, but when you get to daily, you will notice that we just have a daily push up into the tide and the structure. You can see now that we have a structure change of character in favor of buy. So, expectedly, if nothing changes, Euro USD should be a buy, trajectory, at least for this week, between now and next week. So we will be looking out for a buy position on Euro USD. However, for now, there is no signal yet. So maybe this buy can later mature, maybe later in the week of maybe Thursday or Wednesday, depending. And today is Tuesday. Maybe Thursday or Friday, we might have a position on Euro USD. However, for now, there is no signal. But the expectation on Euro USD is a buy for the week. So we are not going to be selling Euro USD. I want to advise you, I don't know if you use Potential Miners trading system, you are not expected to sell Euro USD. However, if you have your own personal strategy that you use, I will advise you to just position for a buy on Euro USD. Don't take a sell. All other things held constant. That's very important. So let's now go to, let's see CHF JPY. On CHF JPY, what is the narrative? What is the narrative for CHF JPY? Of course, when you pick CHF and JPY, they are both safe haven. CHF and JPY, they are both safe haven currencies. Now, JPY has interest rate of 0.75. CHF has interest rate of 0.00. So if anything happens, just like what is happening now, that there is a tone of panic in the market, that the VIX is moving up to 20, people will move their money from high yield currency into safe haven. If this continues, remember I said that if this continue, people will continue to move their money from the high yield currency into safe haven. Now, if they want to do that, the best currency that they will put their money will be CHF as against JPY. So more money will flow into CHF than JPY. Now, when there is dollar dumping, remember that the tone of sentiment in the market is risk on dollar aversion. Anytime there is dollar dumping, now there's going to be a drag effect on CHF. Currency will be flowing into CHF. So for the risk tone that is showing maybe a level of fear, although it's not totally confirmed now, when the VIX move above 20, currency will move into both CHF and JPY. However, when dollar continue to dump, currency or capital will be flowing into currencies such as the CHF, the Euro, and the GBP. You see it now. So expectedly, we are expecting a push up on CHF JPY. So all other things held constant. For the week, we are expecting a buy on CHF JPY. Do you get that now? But for now, the signal is not mature yet. We are expecting a buy on CHF JPY, but the signal is not yet mature. If anything comes up, we are going to post it on the Telegram channel, of course. Let me just quickly, let me see AUD JPY. This is where I want to believe that we can take a position on this particular asset, because things are lining up pretty well. You get it now. So for AUD JPY, if the threat of Donald Trump continue to shake the market, capital will be flowing into JPY and will be flowing out of AUD. However, currently, we still believe that since the S&P 500 is not slicing down significantly, since the composite Nasdaq Composite Index is not slicing down below the cloud on the daily significantly, this particular VIX is still going to come down below 20. You will see that if you see this VIX, you will notice that it's still coming down. So there is likelihood for the VIX to come down. However, we don't want to worry ourselves with whether it's coming down or not for now. What we want to ensure is that since the Dow Jones Industrial Average Index, the S&P 500, they are still above the cloud on the daily, we still have a tone of risk on. So what we want to ensure is to position for a trade on AUD JPY. We are hoping and expecting that the threat of Donald Trump is not going to really disrupt the level of confidence in the entire global market. So if that is ascertained, the position we are expecting on AUD JPY for the week, this trade is going to probably mature within today or maybe tomorrow, depending. And we are going to post it on the Telegram channel. We are expecting a buy to the upside on AUD JPY. That is our expectation. And of course, we are already 44 minutes into the live stream, and I want to probably wrap it here. So, but let's just walk through what we have. Let's see what is the directional bias for AUD JPY. Is still a buy. What is the orientation of the market? Is still a buy. Orientation is still a buy. You notice that we have a markup is moving up massively. So if you go to the daily, you notice that the tide and the structure is a buy. So everything is lining up pretty well in favor of buy on AUD/JPY. So let's go to the 4 hours. You will notice that we now have a break of structure to the upside, and this is where we are positioning for a buy on AUD/JPY. So all other things as constant, AUD/JPY, if this particular candle closes above this bearish candle, AUD/JPY will start buying from this position. AUD/JPY, I want you to take note. This is more or less like we are expecting. This is expectation. If this particular candle or the next candle close above this bearish candle in form of it engulfs it, so you are going to now position for a buy trade on AUD/JPY, and your position will look more or less something like this. I want you to take this, very important, and you are going to position for ratio 1:4. I'm going to post this trade on the Telegram channel. If it plays out, that if it happens that this particular candle close and engulf this red candle, I want to believe you can see me. If this particular candle close and engulf this particular red candle, then we are going to position for the trade like this. Of course, I will drop the coordinates on the Telegram channel, and I want to believe from there you can now position for the trade. But yourself, you can look out for the trade. Let's see, between now and maybe this candle that just opened, this is 12:04. This candle that just opened, maybe by 1 p.m. or 2 p.m., you might need to check the trade. If this candle close above this place, we are just going to enter. You don't need to think of anything. You don't need to panic. Why? We are expecting that because of the risk tone of the market, we still have a risk on dollar aversion. We are expecting that all other things are constant, AUD/JPY should give us a massive buy to the upside. All other things head constant. So that's how we roll at Potential Miners International. If you are seeing this video after the live session, I want you to probably listen to it and understand how we do our analysis at Potential Miners International. The motivation for this live session is to help people to begin to see the market from the global perspective, global macro perspective, I mean to say, so that you analyze the economic indicators. We have a whole lot of economic indicators, but we have narrowed it down to the interest rate, position, and decision, because that is the most important economic indicator for the forex market. However, you might still need to learn how to read some of these economic indicators. Maybe what I will do is that I will be dishing out videos on how to interpret the employment data, how to interpret the GDP, the gross domestic product data, how to interpret the inflation data, so that you now understand that everything eventually dovetails into the interest rate decision. And that is why we focus on the interest rate decision when we are doing our fundamental or identification protocol analysis. So without further ado, without wasting your time further, I want to thank you for coming on board, and I believe we had a nice time today. I remain Mr. Akimbode, the lead analyst at Potential Miners International. I want you to be a part of our community. I'm going to leave a link on the description of this video to the Telegram channel. You can just connect to us and be a part of our community. And of course, I want to trust that this week we are going to make profit together. Till I see you next week or in any of my videos, I remain Mr. Akimbode, the King of Waves. Thanks for listening. God bless you.